Let me welcome Dr. C.K. Narayan, Kunal Botra, and Shrikant Chavan from Kotak Securities. Dr. Narayan, very good morning. You are sticking to names like Mindtree when it comes to buy call and IT, especially mid-cap IT has been doing well. We didn't see any major formation of shorts in Mindtree as such. And interestingly, MCX, everything seems to be going wrong for that stock, and we have seen selling pressure, formation of short positions, and obviously volumes are also high when it comes to selling in MCX.
Good morning, Siddharth. Good morning, everybody. Yes, I think at this juncture of the market, one is playing it a bit safe as well as prudent, just simply following what the market seems to be indicating that this is what it wants to do. Very clearly, the market is suggesting that IT is the place to hide into. And within that space, the mid-cap IT stocks are the names that are really attracting some amount of money. Now, whether this is value buying, whether this is some directional play, or this is just plain parking for the moment of money released from others, that is largely irrelevant, because the money flow into these stocks is creating a small upward draft in many of these names. So Mindtree is one such name which has been attracting a little bit of attention. It also had fallen down a little during the last couple of days, but I think on Friday's price action, he seems to be suggesting that money is back into it. It may not really go up if the market is down today, but certainly it may not be a stock which might fall. So it could be a defensive bet. And if the market is in a mood to revive, then the Mindtree could be a one to bet on. On the other hand, MCX is something which has been taking a drubbing on a very, very consistent basis. Friday or all through last week also it was hit down, and rather forcefully at that. Friday it went down for the count and down on the canvas, I think. Now, but then the selling doesn't seem to relent in this one. So I think MCX could maybe continue to be sold, because there is still room in MCX even at the at the current juncture for a further fall of at least about 2-3 percentage points. So I think with that in mind, I would kind of recommend a stop loss on MCX with a 10-point stop.
If your target is achieved, Dr. Narayan, that would be an all-time low closing, not all-time low closing, but it would be a fresh closing, probably multi-years, around 4 years low closing for MCX, and that stock has been under severe pressure when it comes to selling. Kunal, Ashok Leyland, we didn't have a great day on Thursday, if I'm not wrong, on this stock, but after gap down opening, there was a decent amount of buying in Ashok Leyland in last trading session. You were suggesting to buy, and Raymond has just managed to close below its or around its 200 DMA. You think that stock would remain under pressure?
Seems like Siddharth. So first on Ashok Leyland, yes, the stock managed to recover on Friday's trading session, but largely the patterns for and the structure for Ashok Leyland in terms of price charts are still bullish. I think the earlier resistance closer to 150-55 range for Ashok Leyland, and now this correction of almost 8-10% from its those highs has brought it back again to its key support zones, which is around 138-140 levels. So there seems to be now some bit of demand coming into the stock, at least in terms of price patterns there, and fall is getting arrested for the stock price. So I'm suggesting a buy with 148 as a near-term target on Ashok Leyland, stop us at that 138 mark, which is Friday's low. The second is sell on Raymond. Yes, the stock closed below the 200 moving average, but the key is the bearish flag pattern on the daily charts. And after almost 1.5 years, you're seeing this stock also correcting or falling below the 200 moving average. I would sense that this could be a start of a short-term downtrend for stocks like Raymond, which are closing below their long-term averages. Suggesting a sell 855 as a near-term target. Stop us at 908.
Good morning, Shrikant. Welcome to ET Now. Many stocks, especially mid-cap stocks, opened gap down in last trading session and didn't see any follow-up selling. In fact, there was some bounce back from lower levels. No doubt that they closed in negative territory, but the bounce was quite positive from lower levels. And Apollo Tyre, which is one of your pick, is also one such stock. And Yes Bank, as I was mentioning in beginning of my commentary, that there are a lot of large caps which are forming short position, and Yes Bank has breached some of the important supports. That is a sell call for you. You think there is a further downside which is there in Yes Bank, and traders and some of the investors can capitalize on it?
Good morning, Siddharth. Good morning, everybody. Yeah, what you're saying is right. Apollo Tyre was like something which was like sustaining well above the mark of 255 to 56, and it was above the level of 200 DMA since November 2017. So it was like struggling, and even on the day of panic, the stock has managed to sustain above those levels, and again it recovered back and closed above the mark of 255. The one more important thing is that it is forming symmetrical triangle on daily basis, and it reversed on Friday from the lower boundary of that particular channel. And even the other prices have also fallen to their historic lows. So one thing is very clear, that all these stocks are going to do well, and in that Apollo Tyres is like relatively outperforming, and that's why in today's date we are of the view that we should look for adding Apollo Tyres to our trading portfolio. Here the stop loss level is very nearby. With a stop loss at 250, one can look for adding long position in Apollo Tyres even at current levels, and we can expect minimum 270, 272 on the high side. For Yes Bank, what you are saying is right. There also the stock has broken its multi-support area at 295, and it is exactly the reverse formation of Apollo Tyres, because Apollo Tyres was sustaining above the mark certain level since November 2017, and this one was also sustaining above the mark of 295 since November 2017, but finally on Friday the stock has broken that level and it closed below that with a bearish gap. So if there is any bounce back close to 290, 295, we should look for that bounce back to create some short positions with a stop loss at 300, and we can again expect on the downside 270, 265. Even if we go through with the Bank Nifty, then there also there is a weak formation, and some more weakness is not ruled out if there is a weakness in the market.
Okay, that's that on some of the individual stock trading ideas.